Good afternoon, everybody. Welcome to the July edition of Investor 360. This is a program that is a collaboration of Stubbs, Alderton, and Markleys, TriNet, Silicon Valley Bank, the CMO Forum, and Early Growth Financial Services. So with that, I would like to introduce Anna Evans from TriNet. Anna, would you like to say a few words?
Yeah, hi everyone. Thank you, Lynn. Thanks, Will, for being our speaker today. We're excited to have you. Just a little bit about TriNet. So TriNet works with early stage startups to help them with all things related to human resources. So, and we do it in a very unique way. Basically, we partner with startups and help them to really scale efficiently, attract and retain top talent, and do everything in a compliant manner. We've worked with companies like Snap, Ring, Dollar Shave Club, Netflix, Airbnb. All of them, came to us with just a handful of employees, and we helped them scale to where they are today. So we'd love to help you guys in that same way. Thanks.
Thanks, Anna. Appreciate your support. We have a partner from Stubbs, Alderton, and Markleys with us, Louis Wharton. I'm putting him on the spot, and he's probably fiddling around trying to figure out what to do next. But Louis, would you like to say a couple words about the firm?
Hi, good afternoon, everyone. My name is Louis Wharton. I'm a partner with Stubbs, Alderton, and Markleys. We are a business transactional and litigation firm representing companies from essentially startup through various stages of their growth, as well as handling complex business litigation matters. We've worked with a variety of technology companies and other general companies in a variety of industries. And so we'd just like to welcome you to the program. Thank you to Will for agreeing to be our speaker today, and I'm looking forward to the presentation. Thank you very much, Lynn.
Thanks, Louis. Is anybody from Silicon Valley Bank here? I don't see anyone, and I don't see anyone from Early Growth, or I don't see Peter from the CMO Forum, so we'll get started. So folks, today it is my pleasure to introduce to you Wil Chockley I love the name of this firm, 75 and Sunny, because it describes what is going on in Santa Monica on a daily basis. It's so Southern California, but I'm really excited to hear what Will has to say about himself and the firm. Just an interesting fun fact, and I think we sent everybody Will's bio, but he was with Bain and Company Ventures prior to 75 and Sunny. He's got a great background in venture capital investing. The thing that struck me in his bio when I first met with Will is he's a Dartmouth grad, and he played rugby for Dartmouth. And as a fellow rugby player, I have a lot of respect for anybody who plays rugby, especially at the collegiate level, in a very competitive way. I actually think I was at a tournament that Will played in back many years ago. So maybe it was meant to be for him to be here today and chat with us. So with that, Will, I'm going to let you take it away. And everybody, if you please mute yourself, we'll get started.
Great. Well, thank you, Len. I'll start with just a quick background on 75 and Sunny and on myself. My most interesting fact is definitely that I played rugby in college, and I was about 15 pounds heavier and a lot stronger and less doughy than I am today. But 75 and Sunny, you can think of, we're an LA-based venture fund. We were founded by Spencer Raskoff, who's the former co-founder, CEO of Zillow. He also co-founded Hotwire.com back in the day, and more recently has spun up a couple of companies that I can talk through a little bit later. And Spencer's the sole LP of the fund, and I'm a partner there at 75 and Sunny with him. And we are very much interested in supporting the LA tech ecosystem. So about 30 to 40% of the companies that we invest in are based in LA. Last year, as part of Spencer's own personal angel investing, before we spun up 75 and Sunny, he backed about 30 LA-based companies, and this year we're on pace to back a similar number. We also have a focus in prop tech, that's real estate technology, given Spencer's background as the former CEO of Zillow, we have a lot of kind of depth of knowledge there, and spend a lot of our time in the prop tech space as well. We also spend some time in sort of what we call the future of work, which we define kind of as HR tech and productivity tools. And then we also, given our LA location, spend a lot of time in the creator economy and the intersection of media and technology. So that's a quick background on 75 and Sunny. We invest at all stages from seed all the way to later stage growth. Our sort of core focus of what we do is generally around the seed and the Series A, but we have written checks as late as a Series C or as early as a pre-seed kind of founder and a deck type situation. And then my own personal background, as Len mentioned before joining up with 75 and Sunny, I invested at Bain Capital Ventures for a couple of years, doing venture investing there up in San Francisco. And before that, I worked at a startup also in San Francisco called Thumbtack, which some of you may be familiar with, which is a marketplace for local service professionals, and started my career as a consultant at Bain & Company for a few years. So I'll pause there. Len, let me know if there's anything I forgot, but that's the quick intro on us.
No, so great intro, Will. You know, it's interesting as a new fund gets started in Los Angeles every week, it seems. 75 and Sunny is one of our newer funds. And as you said, it's a single LP. So talking to you about fundraising is a different conversation than talking to some of the other firms out there, especially when, you know, your general partner is your LP. And as you defined a seed round, what's the smallest check you guys have written? Or
so we generally don't lead rounds. So we're usually writing, we've written checks as small as about 25K into an early pre-seed round. And we've written up to multi-million-dollar checks. And one thing to note, we also have been syndicating out some of our allocation into larger deals, particularly at the growth stage, given kind of our limited check size that allows us to amp up our contribution financially to a company. So we've been taking on some external capital via special purpose vehicles to invest in some larger rounds, so that we're not coming in with a paltry little check in a big $100 million round.
Right. Great. And as you look at not leading rounds, that means you're syndicating. And are there particular firms that you generally like to syndicate with, or is that based on industry sector? What does that process look like for you?
Yeah, so we're usually investing beside a lead investor, and we have close relationships with a number of venture funds from sort of my network as an institutional VC, and then Spencer's network as well as both an entrepreneur, and then he's also actually an LP in a number of other venture funds as well. So there are a multitude of great firms out there that will co-invest beside, but it always helps if we have a prior relationship with the lead investor whenever we're writing a check-in. And so that helps us kind of get to the level of confidence that we need to, given we trust the other investors and have seen how they work in the past.
Are you typically having deals come to you and saying, we have a lead investor, or are they saying, hey, we're meeting with you, do you have any friends that you can bring to the table? Or do you have those syndicated leads coming to you saying, hey, we have this great technology, do you want in? Or is it a combination of all three?
Yeah, it's a combination, I would say. So for new investments for us, it's definitely a combination, both of companies who come to us with a lead already in place, and maybe we'll get introduced by a lead investor. So for example, we recently invested in a company that has not yet been announced, but should be announced in the next couple of weeks, with my former colleagues at Bain Capital Ventures. And they led the round and reached out to me and said, hey, do you want to join us in this round? And we took a look at the company and did our diligence on our side and ended up writing a check into the company as well. So that's kind of one way. And then the other is we either outbound reach out to founders or inbound get introductions to founders, where they're kind of in the early stages of a fundraise and we're one of the earlier conversations they have. But we're happy to kind of invest wherever the founder is in his or her process, kind of whether we're the first conversation or the last conversation in the fundraise.
Excellent, excellent. And if I'm a founder with a bright, prop tech idea and company, maybe I have some traction, what's the best way for me to reach out to you? Do I have to do that through a friendly person, or can I reach out directly? How do you prefer to be reached out to?
So generally, the highest likelihood of success is if you reach out through a connection, for sure. And that's because this is really your network is super important. And if you can come to us with a recommendation from somebody who we trust, that obviously means a lot, because particularly at the early stage, you're making a bet on an individual or a founding team more than you are on a product or even an idea or potentially even a market that they're going after. And so having that kind of at least one degree of connection while you're meeting the founder is really important. That said, I'm always happy to chat with most folks who could be relevant. And so feel free to just shoot me directly an email at my email address, which is just Wil, spelled how I do it, which is with one L, WIL, at 75andsunny.vc. So always happy to chat.
So if you're investing at different stages, you're looking at companies from different perspectives. And so let's start at the earliest stage. What turns you on about investing in an early stage company? What are you looking for? What is the secret sauce that you hope that they have to make this, to de-risk this investment as much as possible?
Yeah, so if you go to the absolute earliest stage where the founder may not even have a product built, or maybe just has a prototype, has no revenue, no customers, no traction, but has a big idea, the biggest things that we look for are generally we're evaluating the founder, and then we're evaluating the market size that they're going after and the market dynamics in the space that they're in. So any early stage founder or entrepreneur has probably, or anyone who's founded a company has probably realized that you have to iterate on your product over and over and over again to really achieve product market fit and to really create a product that people want to use. So the product is obviously important and the idea is important, but for us, the two biggest things that we're looking at are the founder, and we're looking at their background, and that ideally would have some sort of relevant experience to a particular industry that they're focused on. Not always, but that would be helpful. And then we're generally looking for some combination of technical, as in if this is a software company, software engineering ability from someone on the founding team, as well as sort of the business side as well. And then maybe also some sort of product leadership. So maybe some product management experience in the past. And then on the market side, we're really looking for big markets, because venture capital is a game where the winners are big winners and there are only a few of them generally. And so if you're trying to make an early bet on a founder, you want to have the upside that allows that company to go to be a $1 billion company in the future. And you need to have a multi-billion-dollar market that they're attacking in order to have a $1 billion company generally. And so that's kind of the two things at the earliest stage that we're looking for. Excellent.
As we look at the past year, and you came into 75 and Sunny, I believe, in 2021.
That's right.
Right at the beginning. So part of the year has been affected by COVID for sure. Has there been much of a change, do you think, in how VC investors are looking at companies through COVID or not? Or have you seen a spike in deal flow? I mean, if you look at the numbers, the amount of money that's been invested in VC firms and the money that they've invested into companies is off the charts compared to the past 20 years.
Yeah, so I guess the numbers, the aggregate numbers are certainly, I've seen the same numbers and I believe them. They are really, really off the charts. I mean, I think activity in the venture sector is just at a level that hasn't been seen ever. And I think it's surpassed even the dot-com boom of the late 90s, early 2000s. And what I would say is that what COVID has allowed is it's allowed, I would say, at least from the investor side of things, two unlocking factors, both of which are kind of enabled by Zoom. And one is that your efficiency is through the roof. So I can speak to founders back to back all day with basically no breaks and meet a number of founders that would have been totally impossible prior to the Zoom era, where you're, let's say, driving to meet a founder at a coffee shop, then you're walking down the street to meet someone else somewhere else, and then you're coming back to your office and meeting someone there. And so there's just kind of the structural time lag that in-person meetings take. Granted, in-person meetings are much more fun, and now that we're going back to at least some aspect of in-person, that's great. The other aspect of things is what video conference sort of pitching and meeting allows you to do is meet founders from anywhere in the country or anywhere in the world without them being on a specific time schedule. So when I was in San Francisco, for example, founders would come and sort of do the rounds, meet with all the San Francisco VCs, and the schedules are limited. You're kind of packed into little corners of time potentially. Whereas now I can meet with a founder in India in the morning, I can meet with a founder in New York in the afternoon, I can meet with founders in LA in person, I can meet with founders in San Francisco and Canada, Mexico, wherever. And geography really plays no factor. And I think that's been a really big unlock across the venture industry. And then the last piece I would add is probably this, I don't know if this is my own opinion, but one of the big other factors that's increased kind of the deal flow velocity is what we call the crossover funds. So what used to be hedge funds coming into late stage venture, then moving into earlier stage venture, coming in with funds that are orders of magnitude larger than the traditional venture funds at those stages. So they're less concerned about valuation and more concerned about just picking the biggest winner. And so that's driven up late stage valuations, which has kind of driven up early stage valuations, which has caused more people to potentially start companies and more competition around deals, which again creates this flywheel of kind of hype and higher valuations. And I don't think that's necessarily a bad thing. It could be a more efficient way of doing things, but the diligence cycle that 2 or 3 years ago was a couple weeks is now down to at most a week, if not just a few days between the investor and the founders kind of for a very hot deal.
Well, that's incredible. And so how many deals a week do you see?
That's a great question. I don't have the numbers in front of me, but somewhere between, I would say 10 and 30, and 30 at the absolute high end and 10 at the absolute low end.
And that's just what you're looking at?
That's just what I'm looking at personally, yeah.
Yeah. So your other 3 partners have deal flow also coming in. So that's a lot of deal flow. Let's talk about companies you've had investments in, generally speaking. Well, specifically, talk about a deal that really, you got very excited about. What made it exciting and what was the result of that deal?
Yeah, so I'll tell you about my favorite deal that we've done at 75 and Sunny, and this is entirely my own bias, but we invested in a company that was founded by one of my former colleagues and friends who started a robotics company, which is generally a little bit outside the realm of kind of what we focus on. We generally are more software investors than we are hardware investors. But this is a founder who I've had a relationship with for 6 or 7 years at this point. And, there are certain people I feel like that you've met in your life who you would back to be successful no matter what they do. This founder is one of those people. And so she and I had been kind of helping her think about fundraising for the 2 years that she's been working on this idea and this company or the idea that is now a company. And she went out and raised a seed round earlier this year. And I was involved kind of with her, helping her through navigating the fundraising process, because for a first-time founder who's never gone into the world of venture capital, things kind of can seem crazy, and because they are crazy, to be quite frank. And so it was great to be able to kind of be a resource, and then to come in and also write a check into her company from 75 and Sunny. So that was one of the more fun. And again, that company unfortunately is still in stealth, so can't give a lot more details, but it's a very cool robotics company that hopefully will be making a very positive impact on the world very soon.
Excellent. Now, so conversely, I know not every bet is a good bet. What went sour with the deal and why?
So do you mean a deal that we wanted to do and then couldn't get done, or a deal that we did and then did not go particularly well?
Let's take both examples.
Okay, so a deal that we did that has not gone as well as we wanted. So this predates me at 75 and Sunny, but we as in Spencer, prior to me joining him, invested in a co-working company a la WeWork, but slightly different approach to the market. Company was doing great. This was all pre-COVID. COVID hit, and the company basically went to zero, and their top line almost went to zero. And that is a very tough thing, because it's totally an existential threat that is totally unexpected and can't be prepared for. And when you're sort of on the road to what you think is success, having something come out of the woodwork and basically just eliminate your entire business in one day is not something that's great. But the company, to the credit of the founder and the team, has survived and has been able to raise kind of non-traditional sources of capital to keep the lights on. And I actually am a very, very big believer in co-working companies in the post-COVID era. I think that funny enough, I think they basically came to the market just a few years too early, or maybe they came at the right time, because the infrastructure is now in place for the post-COVID era, when people aren't going into the office or the traditional office as much as they would be in the past. And so hopefully this company will sort of achieve exit velocity soon and kind of get back on track. That's one that didn't go as well or didn't go according to plan, I would say. And then one deal that we were thinking about doing and went sideways was, we are, as I mentioned, we're very, very active across the prop tech space and have invested in a number of companies. And one thing about real estate is that a lot of these companies end up going after kind of similar areas, even if they're not directly competitive. There's always that idea in any founder's mind, hey, what if we expand to this product, this vertical, this market, this geography? And we as investors generally don't try to absolutely not back competitive companies and try to only back sort of one competitor in any given space. But we were looking at a prop tech company that was absolutely fantastic company, has done very, very well since we talked to them, and would have been a great investment. But the founder came back to us and just said, hey, look, enjoyed speaking with you guys, but there are just too many companies in your portfolio that we see ourselves as competitive with, and this just isn't going to work.
Okay, very good. Do you guys typically take board seats?
We never take board seats. So we're generally writing small enough checks that we try to help the founders in any way we can, and we really do make a huge effort to support the founders. But the giving up a board seat for a founder is a massive decision, obviously, and usually that's done to a lead investor versus someone who's participating in the round.
Absolutely. As you look at the next half a year, because we're halfway through 2021 already.
Crazy.
What are some of the pain points you think we're going to hit moving forward? Have you thought about that? And what
do you mean in life or in venture capital?
Hey, let's talk venture capital, because we all have the stories and trials and tribulations of life that we have to cope with. But just, you know, as you sit with Spencer and your partners and think about, okay, what are we doing for the next 6 months? We have this much capital to deploy. What are some of the trouble spots that make it harder for you?
I would say that the two biggest are actually things that we've already talked about: the rapid deployment of capital over the first half of the year and the massive increase in valuations over the last six to 9 months. And so what's interesting is we could be in kind of a new era of just absolute game-changing companies being started. We could also be in the next .com bubble, and we just don't know it yet. And we have been deploying capital at a rate that I think most other venture funds have, that really outpaces historical norms at valuations that are much higher, again, than historical norms. And so the question becomes, in the next 6 months, are people going to kind of pump the brakes and say, hey, we've already deployed, let's say for someone else, half their fund in 6 months when they were looking to do only a quarter of their fund in 6 months? Are they going to pull back on the investment in the next year or in the next half year? Or are they going to say, all right, well, we're going to actually increase our fundraising cadence and raise a fund every year instead of every 2 years, for example? And so I think navigating that from the perspective of both fundraising and capital deployment is very difficult. And I think we are all hopeful that we are in a new era of rapid growth and technological advancement, but we still very well could be in the next tech bubble.
Yeah. Let's switch gears a little bit. I want to talk a little bit about founders. In your experience, both at 75 and Sunny and your prior experiences, if you look at successful founders, are there one or two traits that come across that you think are really, really important that those folks have that make them successful?
It's a good question. I would say the two that I would point to are grit and charisma, both of which are as far as I'm aware, pretty difficult to measure. But as I alluded to before, founders are generally going to be modifying, changing plan, dealing with roadblocks, jumping over hurdles, pivoting constantly for the early years of the company, and then even into the later years of the company's growth. And so having that ability to just kind of say, yes, we're going to work through this, and the determination to get over those hurdles when they arise is something that's incredibly important. And so tactically, if you can see in a founder's background some example of them dealing with a difficult situation in a very positive way and getting through it and turning it into a successful outcome, that's something that is obviously great to see. For other people, you're just kind of guessing and you're hoping that they have exactly what you're looking for there and that they'll be able to deal with the trials and tribulations of starting and running a company. And then on the charisma side, I say this for kind of a specific reason, and that is, if a founder can't get me excited about the idea for his or her company, how are they going to get future employees excited about the vision for their company, and their customers excited, and potentially future investors at later stages excited? And so being able to communicate your vision in a way that I'm sitting there at the edge of my seat thinking, oh my God, this is the next big thing, that's a great sign, because that means you're going to be able to, at worst, get a great team around you and figure something out that is going to actually work. And you're probably going to be able to sign customers, and you're probably going to be able to continue raising money to keep yourself above water. So I think grit and charisma might not be the exact right word, but those are kind of the two things that I think about just personality trait wise.
I tend to agree with you. I think charisma is really important, and the ability to sell and communicate, and which is part of charisma. and just showing your internal passion and being authentic.
Yeah.
The other piece of that grit, I call that tenacity and endurance. I tell founders, you're embarking, and we're pre-accelerators, so we're looking at pre-revenue companies, maybe even pre-MVP. You're in this for the next 5 to 10 years. Have you ever thought about doing something for 10 years? And, to some founders who've only had a job for 18 months at a time, that's a big eye-opening and awakening for them to understand that. Do you find that there's a common deficiency with founders in the VCs, people coming to you? Is there anything that you see that you wish they had that they don't have, as a general statement, or is that just person by person?
I think it varies a lot person by person. One common thing that I generally try to counsel founders on is what you really want to be able to communicate is you want to communicate your plan. And so that's, what's this company going to do in the next 6 months? And then what's this company going to do in the next 12 years or 12 months to 2 years? And then what's this company's kind of grand state future vision? And if you are able to communicate kind of those 3 things, like here's what we're going to do tomorrow, here's what we're going to do next year, and here's what this company could be in the future, that's what investors are really looking for. And if you're able to communicate those 3 things effectively, that gets to that kind of excitement that you're really trying to drive in an investor. And I think a lot of founders are either very good at communicating the, hey, here's what we're going to do in the next 12 months, or they're very good at communicating, hey, here's what this company could be in 5 years. But kind of the steps, well, all 3 steps of the now, tomorrow, and in the future are really important, so that it gives kind of the investor confidence that, hey, you've really thought this through and you have a plan in place to get to where you want to go.
That's great advice. I always, my counsel is very similar. And also, as you tell your story, in your go-to-market and customer acquisition, you can't say we're going to have 1 million customers, right? You have to say, tell me how you're going to get 1. Tell me how you're going to get 10, and then 100, and build the milestones off of that. Because how you get 10 and then how you get to 1,000 are going to be very different processes.
Yeah.
So, excellent. So, again, we'll switch gears. The big topics that have affected all of us in the past 18 months and had been affecting us prior, but really got a magnifying glass on diversity, equity, and inclusion. Are there things that 75 and Sunny are doing specifically in that area, or things that you wish you could do more of, or how do you see that as a focal point of our industry?
Yeah, I think it's incredibly important. I think from a 75 and Sunny perspective, we are actively seeking out founders of underrepresented backgrounds that we want to back. And so we're really trying to push to get outside of kind of the Silicon Valley bubble of folks who are the traditional guys raising money from venture capitalists. I think we are also trying to back companies that are addressing issues like that as well. So one company I'd point to in our portfolio is called All Voices, which is a company that essentially creates a modern sort of anonymous hotline almost for employees to present anonymous feedback back to the organization in the case of any sort of issue that they have, whether it's workplace harassment or anything like that. And so we're seeking out companies like that. And that's kind of in our future of work thesis, where we're looking for companies who are actively trying to create more inclusive environments at work and therefore more effective environments at work as well.
Great. I'm glad to hear that. Are there, in your portfolio companies, what's their behavior through COVID? Are you seeing them retracting from, commercial office space and just working remotely completely, or Are they yearning to get back together? What are some of the challenges your portfolio companies are expressing to you?
I would say the general single biggest challenge that most early stage founders will, or a lot that at least is presented to us, a lot of the challenges are around hiring engineering talent. And tying into your initial question about going into the office, what we've seen is that particularly companies that are requiring their employees to come back to a certain physical location, whether that's a city or an office, are running into even greater challenges than the ones who are operating fully remotely, who are still running into challenges hiring engineering talent. And so we've seen a big shift, particularly at the early stage of our companies, moving either to a partially distributed or fully distributed workforce. I would guess that of the seed stage companies that we've invested in, probably 90% now are operating in either a fully or partially distributed model.
Wow, that's incredible. And I see that here in my own workspace with our portfolio companies. I have a founder in London right now, stuck there for 18 months through COVID. And I have a founder just moved to Texas, and we're seeing people scatter. And so that's just part of the challenge I think we all have. And
I actually think that's great for Los Angeles as a city, though, because LA is such a great place to live just from a quality of life perspective, that it allows folks who may have said, oh my gosh, I need to be in San Francisco or I need to be in the Bay Area because that's where tech is. Now we're saying, hey, where do I actually want to live? And that allows both founders and employees at startups to come to a place like LA and put down roots here, which in turn kind of builds that flywheel that LA has to kind of increase and grow.
Great. Well, we've had a lot of back and forth here. I want to open it up to some other folks. So I'll give my voice a rest. You won't get a rest, unfortunately. But before we open it up for questions, do you have any kind of words for founders and words of wisdom or things that you would like to see more of?
I wish I had more wisdom to share. I think
You'll get there, by the way.
I think just keep doing what you're doing, and I guess my one piece of advice is always ask for help and use your network and people around you to support you in whatever you're working on. And whether that's your direct network of your friends and family or your colleagues or former colleagues, or even people who are 1 degree of separation away from you or multiple degrees of separation who have kind of a similar background, just asking for advice and help can really go a long way.
Super, super. So folks, we'll open it up for questions. And if you want to ask a question, I'm actually going to let you just do that on your own. I don't need to repeat it. But if you'd like, just put in chat that you'd like to ask a question so I could call on you. And that will keep us from stepping over one another. So if anybody has a question, let me know in chat. And okay, so Lisa, why don't you go?
Hi, Will, so good to meet you. And thank you for all of your wonderful words of wisdom that actually you clarified quite a bit. So quick question, are you part of the Green D venture funds?
I am not part of Green D Ventures, which is a network, for those of you who aren't aware of Dartmouth alumni venture investors. But happy to, if you're involved, happy to get involved.
Yeah, they've included me because I did a work thing, Ascent, through their business school. And so suddenly I'm part of the club, which was great. And it's a club I'm very honored. I'm like, I didn't graduate from Dartmouth. I'm a Bruin, but it's all
Go Bruins.
And I have a call with Darren Wist in a week and a half. So I'm looking forward to meeting him. Another quick question. Do you ever fund healthcare tech? So I'm merging VR and mental health care.
We do a little bit of healthcare. It's generally not an area of expertise for our team. So it's not, we have only one investment in healthcare tech at the moment. So it's certainly not a no, but it's not kind of our core area of focus.
Perfect. Okay, thank you.
Does anybody else have a question for Wil? Now's your chance.
Yeah, I will ask a question. My
Please.
name is Ashok, and I'm a founder of AGR Health. Again, it's a healthcare, but actually we are at the intersection of, we are actually a payment company. We are doing P2P, patient-to-patient payment platform. And I got this idea when I was in Cornell in 2020. I'm a Cornell graduate, and I've got two friends of mine, with three of us together. My question is actually answered by you, if you are interested in healthcare. But I think the healthcare is also expanding, right? I mean, it's not just the healthcare, it's before we had this, So my question is that, are you interested in expanding in the software or the intersection of, fintech and healthcare? If that is something that will be interesting to you.
Yeah, so I think what we see is the rise of what we call embedded fintech, and that's fintech coming in rather than, I guess, 30 to 50 years ago, or 30 years ago, prior to the dawn of man. You have sort of traditional banks, lenders, financial institutions. And then 20 years ago-ish, you saw the rise of kind of fintech 1.0, which were like the neobanks, the PayPals of the world, who are really replicating and improving upon direct processes that traditional financial providers gave. And what we're now seeing is exactly, Ashok, what you're talking about, which is embedded fintech. So rather than a pure play fintech company or a neobank or even a traditional bank providing these financial services, a company that's perhaps a healthcare company or an education company or a commerce company like Shopify, providing what used to be banking services, but now is being provided via software by a company who's not ostensibly on the surface a finance company. So to answer your question, yes, definitely an area of interest to us. Again, I think the healthcare angle for us is a little bit harder just for us to really get our heads around, but I'm always happy to chat.
Thank you.
So Wil, Stacy Book is on a train, and so she's unable to ask a question, but she wanted you to comment on what do you look for in companies from the creative economy?
Yeah, that's a great question. So I think you're still looking for kind of the standard things that I talked about earlier, where you're looking for a big market, you're looking for some sort of founder market fit into the specific area of focus. And we're looking for kind of the same traits in a founder. And I think more specifically, what I personally look for is, the way I see it is that creatives are generally, if you think about the creator economy, they are creators first and business people second, generally. That is not always the case, but that's kind of what my experience has been in the space. And so if you're looking at companies that want to support creators and influencers and creatives, you want something that allows them to spend as much time on what they are passionate about as possible and allow them to make money as easily as possible on sort of what they love to do. They're not looking to spend time on accounting processes and back end new, like anything, and new business development. They're looking to create content and they're looking to engage with their audience. So generally what I like to think about is, what is a company that is going to allow them to spend the maximum time doing what they love to do while still growing their business. So if it's like an accounting solution for creators, I think that's generally a little bit harder for me to get behind, because the creator's like, great, this is an accounting software, I don't want to use it. Like, I'll have my manager maybe use it. But once you have a manager, then you don't really care about what the back end software is anyway. So I think generally something that is as helpful to allow the creator to do what he or she loves is most important.
Great answer. Are there any other questions? I don't see anybody coming in chat. I will say this has been a great session, Will. Thank you for your insights, some of your
Lynn, I
personal
think there was
stories.
one more question.
Oh, did I miss one? I'm
I
sorry.
think, JP, did you have a question?
I do,
Sorry.
as a matter of fact. I just misdirected in the chat. Sorry about that. Hey, Will, thanks a bunch. Appreciate it. I do agree with you that there's more money, having raised money and started companies back in .com era. There's far more money today than there ever was. Not necessarily going to the right things, but it's definitely interesting. Where do you guys sit with respect to companies that have not been in an accelerator or an incubator, but perhaps have come from somebody who's a serial entrepreneur and just decided not to take that route because they didn't need it?
Yeah, I would say the vast majority, I mean, incubators and accelerators make up a small fraction of the sort of whole landscape of startups. And so we have absolutely nothing but respect for companies that go through accelerators, and some of them are incredibly helpful to the founders. But the vast majority of companies that we talk to and invest in have not gone through any sort of accelerator, just because while there are a lot of great ones out there, like the Precelerator, they're just sort of a drop in the bucket compared to the whole entrepreneurial environment in this country and in the world.
Thanks.
Super. Sorry to miss that, JP. I didn't see you raise your hand. Anybody else have any questions? Anna, anything from you?
My dog is barking very loudly right now. So this is bad timing. No, I just want to say thank you, Will, for coming today. It's been really informative and hopefully everyone got a lot out of it. Sorry, guys. I'll mute myself.
It's part of the post-COVID world. We're all used to that now. It's just endearing. So don't worry about it. Okay, last call for questions. If not, Will, thank you very much for your time today. I appreciate it. I appreciate your friendship. I look forward to doing a deal with you. Hopefully we can make that happen. And with that, let's call it a day. Thank you all very much for attending.
Great.
Thanks
Thank you all so much.
Thank you.
Bye.